following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And hope you guys are having a good morning. I'm in the States, not in Asia. We're going to take a look at the Shanghai. Interesting how this works out. As we talked about, this 3554 area, seemingly a little bit more support on this bottom of our weekly profile. Why are we talking about this first? Could have a bearing on what's going on in the rest of the world. They've had some interesting announcements in the past 24 hours. One of them, namely, that's seemingly making the market happy is anybody who does a short sale on short-term transactions is going to have to wait a full 24 hours to cover that short. Let me think about that. Would that cause me to stop shorting stocks? Maybe, yes. So we're looking at, a little bit of a new innovative way of controlling the marketplace in Shanghai and in Shenzhen. Here's the 240-minute view here. A little bit of a green shoot above there, but the fact of the matter is, just stepping back, we've met some targets down below. We talked about 3554. We talked about not buying that bounce. I think we had about 3 or 4% move up and waiting patiently until we possibly may just either gravitate to a higher resistance area, which I'll talk about in just a second here, or break down below this 3554 area. So where's the higher resistance area? Well, looky here. Here we go, 3860. So keep your eye on the Shanghai. This is the full index we're looking at right now. There's no future on this. So as we look at this, 3860 is going to be a selling point or breakdowns below 3554. Right now, you're kind of in no man's land. But the good news is you've had these profiles appear above price action like we talked about yesterday and the day before on the Shanghai, on the intermediate, and you're sitting near those weekly unfair lows. And I feel like we may just bust down below those just to start getting some more folks out in China. This is an ugly situation, and it hasn't seen its worst days yet, in my opinion. All right, so that's the situation there. Staying on the Asia theme for a little bit here, we're going to look at the Nikkei, and obviously has, the yen getting devalued has some bearing on this particular instrument, but, not a big leverage ability areas to start trading this thing on a long-term basis. You've got some short-term leverage here. My opinion is the yen's going to get devalued, so I'm not a big fan of shorting this index because the repricing of this index based on the yen getting devalued is a little concerning to me to try to go short. So again, regardless of whether the economic situation in Japan is frothy or not frothy, I'm just kind of waiting to see what the yen does to even look at the Nikkei with any kind of conviction. That being said, let's go into the yen and let's look at the my favorite trade. I had an email about this actually. If that listeners, or if that the person who sent the email is listening, 123.35 was where he was talking about putting stops. Now that actually is too tight. If you're looking at this from a long-term basis, these inflection points are, on the weekly and the daily, the 240 is a little less so, but you've got to give it a noise factor. And that noise factor is based on your appetite for risk. But I think if you're looking at this as a long-term trade, you can't, literally you're basically putting the stop at the support area if you look at it that way. Now, this was a great question, and I'm glad somebody asked this question. We're going to go right into the Forex section here on the scanner, and we're going to look at, we put quite a few new Forex pairs in here. We're going to look at these areas, and see that 123.39. 6 is the number there. That means we've been above this particular profile 6 bars in a row, and then on the weekly 12. So from a long-term, intermediate-term strength standpoint, we're looking great here. But the question again was, our stops at 123.35 in order here, and the answer to that is no. I mean, here's your landscape view. That's where we're at there. And as you look at this, okay, this is kind of a standard math equation that we use in the automated systems. And if we're trading the yen, what we do is, some of these like crude oil, gold, obviously a little bit more volatility at times than the yen. So on those particular instruments, we actually give 20%, sometimes 25% of the height of the box as a stop going into the box or outside the box. What does that mean? Or inside the profile, outside the profile. So what we use as a standard measure, in all honesty, is somewhere between 15 to 25%. So if you multiply, let's just take the midpoint of that 20% and the height of this. So 121.40 into 123.40, let's just call it 200 pips, 20%. We'll give this 40 pips inside this box as a noise level in an automated system type fashion. So you don't have to be that loose, but we're trading those on a more longer term basis. So if you're kind of day trading these, obviously that's a little, large, especially around a daily inflection point. And what you do on the short term is basically go down into the 60-minute or 240, and again use the height of the box, which is usually, as you can see, this is about what, a 80, 70. This is about a 75 pip height span of the box on the 240. So 20% of that's going to be about 14, 15 ticks. So, it's all relative to the box height. And this box height on a day trading standpoint on the 240s is going to be obviously on a relative scale in the same neighborhood. So when you go into the long-term view, give yourself a little bit more room, but that room is always relative to the height of the box, if that makes any sense. I don't know if you're asking me to reset this off. I guess that's not for me. Okay. Let's take a look at the euro really quick. Something else I always have my eye on here. Again, just religiously looking at this 109.50 area. I love how this thing's acting. It's compressing. I think we're going to have a move one way or the other. And I'm looking at that move to be on the downside. So again, daily closes, this is our daily, anything below that 109.50, just like we had there that day. I got stopped out of that trade, but we're going to look at daily closes below 109.50 to look at this as a continuation down on the euro of the long-term trend down, which is, as you step back, you see what the score is there. Looks like it's sitting on the edge of a cliff ready to implode again, in my opinion. Let's take a look at the dollar. Again, had a little bit of a pullback yesterday. Come on, charts. Targets above 99.51. And while I'm waiting for the dollar to come up, I'm going to go back to the yen. Guys, let me restart something here really quick. Just sit tight. Let me take the charts off and let me restart something on my e-signal. Okay. And okay, here we go. Sorry guys, here we go. All right. Should have our charts squared away now. Man, it's starting to get hot down here in North Carolina again. Whew. All right, here we go. All right, there's our yen trade. I forgot to talk about the rest of the question earlier. Let me address that. we talked about the stops, and long-term stops, even past the 123.39, have to be around 121.50. So the intermediate stops are 123, below 123.39, based on your appetite for risk, based on that math equation we just talked about. Complete long-term uncle points have to be below 121.50. All right. So you got two stop levels there based on intermediate and long-term. But where's the targets? We always look at trying to gauge the targets by letting the 240s kind of regulate the trade up. And on this case, since this is a long-term play based on, in my opinion, the weeklies, where we started at 101 2,500 pips ago, I'm just going to not advise, but I'm just going to suggest that if you're playing it for the long term, you want to kind of let a long-term stop out, because this thing could go to 140, and again, the people who are going long the yen at 101 and picked a target at 104 for a long-term trade, they've missed 2,000 pips here. So the answer to the target question on the yen is just wait for this thing to kind of trailing stop you out relative to profiles. Now, what does that mean? That means on the weekly, we're trading on the long-term weekly. I hate to, give it so much room, but letting it stop out below 121.50 is gonna, and we'll have a new profile. We're gonna have a situation where, as the yen edges higher, if it does, you're going to have higher profile levels to kind of guide you up on the daily. So I'm going to kind of use that as a target environment for the yen itself. I don't know if I can drag that answer out any farther, but I could try. Something we didn't talk about yesterday, I think we need to just kind of get on the same page with. We crude oil, we got about 40 seconds left here before break. Crude oil, we always talk about things on the lows go lower, things on their highs go higher. And again, that breakdown below 57 on this September contract. Here's our daily. We broke down below profiles again. There's really not a lot of reason here to take this trade off, still on the short side. And they're talking about a bounce in crude oil now. I love it. But here's the 240s regulating the trade down. Again, you've got short-term resistance at around 46.01, and I don't see this as a big-time turnaround. We do have some signs of some exhaustion measures here, as we did there. We had the magenta bars on Navigator. We've got them again. But we're going to talk about this a little bit more when we come back from break, guys. Hang in there.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with crude oil here. Long-term trend still down. Going to be saying that for a while now. 47.17 was that breakdown point recently on the dailies. That's going to be kind of a wait, be patient, see if we can get back up there to retest. I don't know if that's going to happen. The good news is for guys who are trying to nibble, we have had some magenta bars up here as we did here on this little bit of a bottom that we actually rallied $4 or $5 a barrel off of. We got that sitting here. No divergences on a long term, by the way, which is good for the shorts. But you kind of got a lower low here on the 240 and a higher low here on the Navigator. At the same time, you got a 240 demand area happening here. You might have a little bit of a contra trade north situation here, but I think 47 is going to be the best case scenario. I'm seeing things. Was that a bug? 47 is going to be about the best case scenario for that bounce. 47.17 to be exact. Do I think it's a great time to short right now? Crude oil? No, I think you just need to sit tight for a little bit on crude oil, see what's going to happen here, see if we're going to break out of these 240s again. I think we've all the things considered that we just talked about, especially with these magenta bars down here on the daily. You got to be willing to just kind of be happy with what's happened so far. Here's gold, and just don't know how to coin this any more than to say just. It looks like we're consolidating to head lower, and there's really not a lot of reasons here at all that I can see. I know we've got some magenta bars down here on gold, but you've got a long-term profile sitting there. You're crowding the bottom of that profile continuously, and I just don't. I mean, upside targets on a contra trade are going to be 1110. That's it. But any breakdowns below 1080, which we haven't had happen yet. are going to have to be looked at as a new leg down for gold. So is gold non-directional right now? I would say so. We're just kind of chopping around. Don't get in the habit of thinking that you figured out a range on something and going heavier to maximize that range. That's usually when the breakouts happen, and some people are on the wrong side, so watch out for that. Gold can do that. As you know, it was a $50 an ounce move the other day in like 60 minutes pre-market. Phew. Watch out for stuff like that. All right, so let's take a look at the notes really quick. This is something that I've been kind of bullish on, or at least not, willing to try to pick any battles on the short side. This 127.11 looks like it's held this week. That's your new support on the 10-year, believe it or not, and that's based on also some of that reciprocal arrangement between the notes and the S&Ps. So what am I going to do? So stops below 127.11, and on the notes, based on your appetite for risk, based on that math equation of looking at the height of the box and just doing a multiple of it as kind of a noise level. So what am I doing now? I'm looking at our S&P breadth situation. Again, just the most non-directional situation that you could ask for. Here's our futures on the S&Ps right there. Just look at that. Just literally gray across the board. And we talked about forever, actually, not being happy to step in large on the long side on the S&Ps or stocks in general because of this, the internals of the S&P just not showing any concert with the S&Ps as they go up. So here's a bottom. We're sitting at 2085.5. That's what that's saying right there. Here's our pre-market, or in that general vicinity. By the way, it says bottom or top when you're in the neighborhood of those bottom or top inflection points on that time frame, on that profile. What does that mean, vicinity? It means that when we're within a 10% multiple of the height of the box within that inflection point, it's going to flash that sign. So what does this do for you? Let's go into the S&Ps. It's alerting you that we're sitting at a high probability area to trade. And what does that mean? That means that we talked pretty religiously about this 2102, 2104 area to try to pick a battle again on the short side. That's worked out. And we've talked about some targets down below initially of 2085.50. That's what that's about. I know we've broken down below this previously, but right now, pre-market, obviously we're trading down a couple S&Ps here, but you're going to have to look at the breadth. I'm not a big fan of buying these inflection points, put it that way. So we're looking now. We've reached a target. We're more than likely wanting to sit still here, and we're going to continue this conversation when we get back from this break.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're kind of finishing up with the S&Ps here. Again, I'm a big fan of using our breadth connotations up here to kind of guide me on what to do around some of these inflection points. Remember, long-term inflection points take precedence over the shorter term. So we're right now at this 2085.50. I'm going to go into our futures section here. And as you notice, we're actually literally, you don't see this that often. The S&Ps are within the balanced area on every single time frame, but we're sitting at the bottom of a profile on our daily, which is a big deal. That was our target from coming off that 2102, 2104 area, which, by the way, is shown on the scanner here, 2104, and there was a 2102 POC there that, remember in wide profiles, we got to pay attention to these POCs. So that was something where we poked our head above. We talked about, you got to take your medicine sometimes. When we get back below and then retrace back up, I can't really begin to tell you how powerful this type of situation is. We reverse, we go back, and we have an inflection point, 2102, 2104, that DMZ. We go back and migrate back up into it. Those are very powerful situations, and the automated systems that we have really look for those situations. Then we talked about these targets down below 2085.50. I like the way this is sitting right here at this stage. Again, I'm willing to wait patiently until we break down below that level, and I'm going to pay attention very seriously to what's going on with these breadth indicators. Now, remember, this is breadth on the S&Ps. You can access breadth on any index in the world on any time frame from the heat mapper here. But looking at our 60-minute, we talk about this as a trading system in itself. Just throw everything else out the window. When we look at these crossovers here, there's negative to positive, and here's positive to negative on July 31st. We're able to look at this as in this way. The internals are saying that for the most part on a short-term basis, and again, the market hasn't opened this morning, so this is going to change a little bit because the internals, the stocks within the S&P 500 have to actually start printing for this to react, and it reacts real time, well, within 60 seconds actually. We'll kind of get to see where this thing's at, and that means that on a short-term basis, we'd have to actually change tone to start thinking about buying that 2085.50 area, and I'm not a big fan of that anyway because of our longer-term situations here, especially the weekly. That's what I'm primarily focused on, is the long-term barometer. But the 60-minute is a short-term trading system in itself. So right now, I'm going to wait till the market opens. I'm going to wait and see if we go below 2085.50. And I'm going to keep my eye on this particular internal breadth on the short term and see if we start getting some or grabbing some momentum here with the other time frames. All right, so looking at the ETFs, here's our 4 hour, here's our 1 hour. Here's our strongest ETFs here based on the heat map. XLV, no mystery there. It's a great way to, oh, by the way, by the end of this week, we will have custom list buttons here that you can actually go back to your custom lists a lot easier than the way it is now. Right now, you've got to, create a custom list, save, go back and load it. There's just going to be hotkeys up here for accessing your custom lists because we've had a lot of suggestions about that, put it that way. All right, so that's the situation on the S&Ps. We're going to take a look at Apple. This is something I think I heard Larry mention yesterday. I just take his words at face value all the time. 118 was probably going to be a target on Apple on the downside. Lo and behold, it did it in one day. Amazing. So what do you do with Apple now? 124.70 was that kind of go back and retest and get some momentum below that daily unfair low. These are all, these are the powerful situations when you go back and get in that retest neighborhood here. That happened yesterday. It was almost a gift for it to rally up there. But what do you do with this now? So I think the thing that you don't do is look at this. Well, let's just back up for a second. Let's go back to our weekly. Remember, there's been a change in tone. We've had a couple of closes on a weekly basis already below this profile landscape that we look at all the time. And these inflection points are delivered in the scanner. Pre-market, I think we're trading 117.54 right now. So, 118, obviously that was an awesome target. But here's our 240. We always talk about letting the 240s regulate the longer term trade down and allow this to kind of temper, what you're supposed to do. I mean, a lot of times, everybody's done it. I'm not immune to it. We've all taken off trades way early sometimes. And Apple, obviously, there's some volatility to this thing, but you may want to let these 240s kind of regulate this thing down. And when in the scanner, when you start seeing, and I'm going to go back to my dashboard here, and I'm going to pick out Apple. Where the heck is it? Oh, there it is. Apple. When I start seeing some green shoots here on the 240, that may, or even the 60, that's for your short-term traders. When I start seeing some green shoots here, that may be the time that I'll say, you know what, maybe I should sit on the sidelines for a while and wait for a better profile to appear to sell more at higher resistance levels. I know I said a lot there. Basically, what I'm looking for in the scanner, and I'm going to go here and I'm going to just type in Apple. I'm going to pick that out and I'm going to add it. And that's the start of my custom list, by the way. If I want to come in here and save that, you can figure that out. But when I have particular stocks that I want on my radar screen all the time, if I start seeing some green shoots here, I need to take a hard look at that. All right. Right now, it's kind of let a fine line breathe. And we're trading 117.5 right now. And this will tell you when some profiles are starting to become breached. So I'm going to get rid of that. I'm going to clear my settings. I'm going to reset sortings, and we're back to normal here. And remember, guys, this was all based on the original premise that Pete Stottlemyre came up with, market profile. In my opinion, the guy's brilliant, but there was a lot of subjectivity to using market profile. What I think we've done is just create the algorithms that turn it into pretty objective viewpoints. And I haven't talked to Pete in a long time, but I think he actually would appreciate this. And I'm planning on talking to him when I go to Chicago the next time. So he hasn't seen this, but it's an interesting read on market profile, to say the least. And it's really helped us in our proprietary trading and our automated trading to use some of this information. Let's take a look at this one. This is one, I just get a lot of emails about this, and just want to state that Amazon, not the stock to short, stay away from it on the short side. I think the market's going to head south, and that may drag this thing down, but it's not something that we want to play around with. There's way better shorts out there. Australian dollar, this is something 73.45. This is a really, really nice example of a stock that has been in a downtrend. The dailies have been regulating it. You've had a battle point there at 73.45, and I just want to pull this up because this is something not similar to Apple, but it's, let me see, where is it at? Okay. These are the inflection points we just crossed. See that 73.45? That's your first sign of some kind of breach of not being able to reflect off of that resistance area on the bottom of a profile. Now, when is this long-term trend down in danger? Now, see these green shoots over here? These were the first signs. All right, now I've been a big fan of shorting this since, I think, 94 was when we had that technical breakdown in the long term. Let me just reference that. Yeah, around 94 or 93, 3 and some change. See that? That's when the long-term trend changed. Now, kind of go back to Apple in your mind right now. Apple going up, blah, blah, blah. It's very similar situation. We break on the weeklies. We define that there's some technical damage. The dailies are confirming a lot of that. Then we start looking at this as sell resistance. Now, there's been some very big overhanging fundamental reasons to sell this thing. One of them, namely, practically a government intervention. But as we look at this, long-term trend is still in force, and we're looking to the dailies to regulate this. So I'm looking at adding more every time we have a breakdown or get even near some of these resistance areas on the top of the box. So right now, the way I trade, I'm relatively stingy on some of these, which hurts me sometimes, but that's a little bit too far into the box for me to take the pain of staying with this trade. So I'd be willing to try it again at around 74.62 or wait until we get back down below 73.45 again. That's just the way I trade. I mean, right now I'm not really that interested in playing around with this in no man's land. Now, at the same time, you got to keep your eye, if you got the scanner, you've got to keep your eye on things like this. Is there a new weekly profile attempting to appear? You'll get those signs by these yellow peelbacks. See that on the Australian dollar, Japanese yen, the yellow peelback. So you'll be able to get signs that maybe there might be a new profile appearing on the weekly. And let's give you an example of that. Let me get back to the stocks. So the stance on the, we're going to look at a couple of stocks in that same situation. Archer Daniels Midland, ADM. Now that's showing some signs of a new demand area attempting to appear on a weekly. Aetna on top, AET. Those are warning signs for the long-term trend. So I'll go to Aetna and I'll pull this up. If you pull up this thing that says Taz says, it'll say caution to longs. Targets may have been met in the interim, and trading range could be developing in the uptrend. New supply is attempting to appear above. If this conditions, blah, blah, blah. So you can read that, and it's just, and you can set your entire screen to do filters for new boxes. Boom. And then I'm going to only show matching results. And this shows me long-term trend changes. Long-term possible trend changes, excuse me. Okay, and you can actually go into the scanner, which is kind of a neat piece of information. I'm going to pull up my weekly, And I'm going to see that there's 34 new profiles attempting to appear on the long term, 6.8%. And then there's 1.8% appearing above. What does that mean? That actually means that by the end of the week, if we stay like this, we're going to have some numbers shift around, and some new weekly profiles more than likely will be in force, and this could affect some of the Brett statistics. So keep your eye on numbers like this. This is actually not overbearingly new demand areas appearing below, but it's something. When this thing gets above 15%, this is a very serious indicator. All right, so let's do a sort here really quick. Below the box. These are stocks that I've got my only matching. Okay, so we know these numbers ahead of time as far as summary numbers, but we want to continue to stay focused on stocks that are not doing that well in a market that at best is moving sideways. WFM, Whole Foods, again, there's the Pitney Bowes of the world. Some of the energy stocks, Chesapeake, Fluor Corp, GE. Let's take a look at this one, GE. And then we're going to go into some oil stocks that maybe is turning in the latest oil. We'll see. Here we go. So GE, this is one, we really had this very similar situation. I talked about a ripe opportunity the week before. Go back and retest that 26.21, and that's going to be stops above on GE right now. I think the market's going to head south. This is our daily. We got the profile way up there above price action. That's very bearish, and GE is not the one to buy on sale right now if you think it's got cheap. This is something that could drift lower, and if a market turns south, this is showing its hand relatively early. All right, let's go back into the ETFs for a second on the scanner. Let's pull up, here we go. Oh, wow, it's the last one in line on the weekly, XLE, imagine that. All right, so what we're doing here is we want to find, if you wanted to find some opportunities on the long side within the XLE stocks, again, TSO glaringly sitting there. PSX, okay, so let's look at this one. Green shoots on the 240 here. Still not a big fan of going long anything related to oil, but here's a weekly on PSX, 77.58. This is in the scanner. There's a 77.58 bottom of the profile. God, man, that's a wide box. Oof. We'll be right back, folks. We're going to sum up PSX and then move on.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Anadarko Petroleum, APC. We're looking at some oil stocks still. See that? This is another example. The yellow peel back that's happening there. What that means is caution to shorts. Targets may have been met in the interim. And that, going back to the chart, this is what this means. This means that we might have a new demand area happening down here on APC. It's already started having some situations. We've been above profiles recently. So again, a new weekly demand area. It might not be on a long-term basis. You might be able to squeeze some juice out of this. We've come down pretty good here. And that new demand area will give you some new inflection points to pay attention to. And we may be able to, as you can see, oil making new lows. APC's kind of bucking the trend a little bit here. And that new profile as a kind of a support area on a weekly could give you a new place to put stops on a long term and a chance to really look at this in a little bit of a bounce manner. So pay attention to that, and the scanner's kind of alerting you to that. There's not many up there like that, actually. EOG Resources, HP, Pioneer, Spectra, and Cimarex. Those are the 5, I guess, 4, 5, 6 that are in that state right now. All right, let's go back into the S&Ps really quick here. Excuse me. Getting a little bit of a bounce here. Not that concerned about it. Talked about just, not really getting into the short frame of mind unless we get below 128 2085.50. But on the converse here, we have, we've got some 240s here, some short-term resistance areas now. Yesterday, it used to be at around 2094.20. Now we've got some resistance. We've already hit pre-market a couple hours ago, 2093.50. So that's going to kind of be a short-term resistance area to maybe leverage here on the short side. And those numbers are plainly stated right there. There's that 2093.50. We're going to take a look at Netflix really quick and Facebook. Nothing new here, even though we've had a little bit of a pullback yesterday. I mean, I wouldn't write home about this. This is definitely one. We don't have any new inflection points to pay attention to here on this one. Facebook. This week, we've had a new profile period, super wide. What does that mean? That means, buckle your seatbelt. We're going to be in store for some volatility here. And we've come back 2 days ago and pretty much reached this top of the profile, which, remember, we profile appear below. We're still in very bullish manner. You can see no new profiles attempting to appear. 3 days ago, we reached a low of 91.80, and that profile high is 91.67, so within 13 cents. So, what do you do with this? Not a big fan that the market's going to drift higher, but Facebook, obviously, strong stock in a market that's kind of going sideways. And if you got Facebook in your portfolio, I think you got to put some stops below 91.67 and some below 89.50. But remember, my feelings on the market is the S&Ps are going to head south here. Guys, you've been great. Stay tuned for Larry. He's next. And all the hosts on TFNN today. We'll be back again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.